In this video, I'm going to explain about value added tax system in Malawi. Value added tax system in Malawi. So, what is value added tax? And how is value added tax system works in Malawi? So, value added tax is an amount of tax that is taxed on goods and services that are taxable, or in other words, is an amount of tax imposed on ad valorem, or the value that is added on the goods and services. What we are saying is value added tax is a tax on amount. So VAT in short is the tax. Amount that is imposed on goods and services that are taxable. Okay, that is the first point. So the buyer normally pays this tax to the seller. Okay? For goods to transfer from one person to the other, there has to be a buyer and a seller. So you as a buyer, you pay tax. So tax paid on purchases is called input tax. Input tax. Okay? These are key points to note. Number one, value added tax is a tax that is imposed on goods and services that are taxable. Number two, the buyer normally pays this tax to the seller. Okay. Number three, tax paid on purchases is called input tax. And number four, tax imposed on sales is called output tax. So there's input tax and output tax. If you are a seller, okay, you have sold your items, you have sold your goods, you have sold your services to the buyer. The tax that is imposed is output tax. If output tax is more than input tax, the balance is payable to Malawi Revenue Authority, MRA. MRA. If output tax is more than input tax, the balance is payable to Malawi Revenue Authority. When is it due? VAT charged in the current month is payable to MRA on the 25th, on or before the 25th, on or before the 25th of the following month. So VAT charged in the month of January, for example, is payable to Malawi Revenue Authority on 25th of February, on or before the 25th of February. Okay, so a bit of background. All what you're doing here is a background of Malawi VAT system. Okay. Okay, what else should we be aware? Who should be a person or a company? Remember, a company stands as a person, a persona, in as far as business is concerned. A registered person will be charged VAT when the person imports or locally acquires materials for his business. We've already said that should be input tax. So the law, the tax law, the VAT Act, Malawi, that is the act that was enacted in 2005, states that the VAT Act states that a person or company selling goods or services in excess of 10 million Malawi kwacha should register for submission of VAT. If your business is making more than 10 million annually per year, it's a must to register for VAT 30 days after the day that you recognized the excess of 10 million. Okay? Businesses that makes less than 10 million kwacha can or may voluntarily register for VAT submission. Okay, there are some businesses that make less than 10 million and they are likely to be dealing with government or they want to stand legit. They are advised to voluntarily register for submission of VAT. Those are the key points to note. So persons, or should we say registration for VAT should be made 30 days. Or we should say within 30 days. Within the 30 days from the date he, the qualified person, the qualified taxpayer, the qualified taxpayer qualifies for submission of VAT. It's as simple as that. Okay. If you pass those 30 days, then it becomes a problem. You become an enemy of Malawi Revenue Authority. So there are obligations that needs to be followed by a registered person. Okay, it's a mandate to follow such obligation if you are a registered taxpayer. Number one, the registered person should issue a VAT invoice for every taxable supplies made. Okay, you should issue a tax invoice. Number two, the registered person should keep proper accounting records for all sales invoices and purchases invoices. Number three, a registered taxpayer or registered person should preserve the accounting documents for 7 years. Okay, those are the obligation. Number four, a registered taxpayer person should keep a VAT account for all sales and purchases. You should keep a VAT account when you make a sale. So when you're using accounting software, this is done automatically, where when you make a sale, the system asks you of a VAT rate, then it takes automatically to the VAT account. Every month, you extract the information from the VAT account. You check whether you've got payable, or you claim the if there is a claim whereby the input tax is more than the output tax, and the difference is claimable from Malawi Revenue Authority. Okay, what else should we know about VAT? Note, there's a point to note, very important point to note. What's the amount a taxable invoice? Okay, what information should a tax invoice preserve? Okay, what we're saying is an invoice must be issued not later than 7 days after the delivery of goods and or services. Okay, it must be marked as a tax invoice on top. Okay, so the tax invoice must contain the following information. Number one, VAT registration number. Of you as the seller. VAT registration number of the seller. This is a taxpayer's identification number. This is a taxpayer's identification number, or TPIN. This is a taxpayer's identification number. Okay. Taxpayer. Or commonly known as TPIN. Okay. Number two, the tax invoice should have a serial number. Serial number or a sequential number. Okay. Tax invoice number NIV 1234 or tax invoice number IN 00123. Okay. Number three, a tax invoice should have a date of issue. Date of issue of that invoice. Okay. It is a must also to note that a tax invoice should have name and address of the purchaser. That's number four. Name and address of the purchaser, or the person who purchases goods and services from your company. Number five, a tax invoice should have date of supply of goods. Date of supply of goods or services. Number six, the tax invoice should have total value of the goods. Total value of the goods or and services. Number seven, a tax invoice should have the rate of tax. Okay. Currently, VAT rate in Malawi. VAT rate in Malawi is 16.5. Okay, so you take the subtotal of your goods and services and you charge 16.5 on top of that. Then you have the gross amount where you take the subtotal of the goods plus your VAT, and the total, that's what you charge on your invoice. Then it should also have the registered person's name and address. The person that you're charging your services, you need to put a name and address. Okay, those are the key items that ought to be on a legitimate tax invoice. Okay, we've already alluded the fact that as a taxpayer, you need to keep your accounting records for the purchases and the sales that you've made, and you need to submit your tax, your VAT, to Malawi Revenue Authority on the 25th of the following month. Okay, so let's look at taxable supplies. What are taxable supplies? A supply of goods means any arrangement under which the owner of the goods with or part of the possession of the goods, including provision of the goods by sale, barter, lease, transfer, exchange, or gifts or a similar disposition and appropriation to own use. So there are different categories of supplies, including the following. Okay, number one. The processing of data or supply of information or similar service. If you are in a company that is processing data or is supplying information, that, my friends, is a taxable supply. Number two, supply of staff. Okay, if you're in a business of supplying staff, that one is a taxable supply. The acceptance of a wager. Acceptance of the wager or stake in form of betting, gaming, including lotteries. Okay, that, my friends, is a taxable supply. So in Malawi, there is a special tax that is paid on gaming. All right, gaming, what you do, there's a portion that goes to the gaming board, the Malawi gaming board, and a portion goes to Malawi Revenue Authority. So instead of charging the normal 16.5%, those who are gambling and betting, they are charged 20% on sales value. And what is done is you take your 10%, you submit it to Malawi Revenue Authority, and another 10% goes to the gaming board, the Malawi Gaming Board. So these are special cases where you don't count the input tax. You just calculate the output tax of 20%. You divide in two. Half goes to Malawi Revenue Authority, and another half goes to the gaming board. So you don't have to calculate input tax. Those are the special cases. All right. So number four, the making of gifts or loans of goods. The making of gifts or loans. Okay. So this, the banks, when they're charging, when they're issuing loans and so on and so forth, it's a service. They're selling, so they need to pay VAT. The appropriation of goods for personal use. The appropriation of goods for personal use or consumption, okay, by the taxable person or by any other person. That, my friends, is taxable. When the manufacturer decides to take from the counter goods for his personal use, it should be accounted under output tax. A sale has been made in kind to the owner. Okay? And the Malawi Revenue Authority will come and check. how much was taken for personal use. In fact, you have to disclose yourself, because when they come and check and find that you're lying, you are going to be hammered with penalties. You're going to be charged with penalties. Sale, transfer, assignment, number 6. Sale, transfer, assignment, or licensing of patents, copyrights, and trademarks, okay, or computer softwares. Those are taxable supplies. Now, there are some that are 0 rated supplies. 0 rated. 0 rated supplies. What are these according to the VAT Act in Malawi? So persons who wholly manufacture exempt goods cannot register for VAT. Persons who wholly manufacture exempt goods and services cannot register for VAT. So it doesn't make sense when you supply exempt goods, then you register for VAT. You must not register for VAT. So we shall see what are those exempt goods and services. There are times also when a manufacturer or seller, a wholesaler, can be a mixed supply where you partially manufacture or sell exempt goods for VAT and goods that are chargeable VAT. What should you do? Okay. Initially, exempt supplies or mixed supplies or partial exemption refers to supply of both taxable and exempt goods. Where a registered person incurs input VAT, which relates to exempt supply, he is partly exempt and cannot take credit for all input VAT. So what normally happens is that the person must work out how much input VAT is deductible using a standard method. Okay, there is a relief standard method that should be done if you supply exempt goods as well as or you supply partial exemption goods. All right. So the relief supplies what are these relief supplies? You know, tax is about following the law. Nothing special. There's no rocket science. You must understand the Tax Act and just follow what the Tax Act says. Okay? There are some relief supplies that must not be charged VAT. Number A, goods and services for official use of the president and the vice president of the Republic of Malawi. Those goods and services are given relief on VAT. Number B, goods and services for use of a retired president and a retired vice president of the Republic of Malawi. Okay, so those are given a relief from charging of VAT. Number C, the goods and services for use by the National Council of Sports. Goods for the use of National Council of Sports. Okay. D, goods for the exclusive use of the government. Goods for the exclusive use of the government of any country, at foreign embassy, or foreign embassies, consulates, missions, and consulates in Malawi. Okay. Number E, we're saying goods for the use of diplomatic staff in terms of the immunities and privileges Act. Okay. F, goods for the use of international agencies or technical assistance schemes where the terms of the agreement made with the Malawi government includes exemption of taxes. Yeah. It's as simple as that. Those are reliefs supplies. Now, time of supply. There's an important element that we need to understand on the time of supply. What is this time of supply? What we're saying is VAT is due and payable on the following conditions. Number one, on the dates on which the goods or services are first applied to own use, where goods or services are appropriated created to on use by who? The manufacturer, the seller. If you decide to take the supplies for your own use on that date, on such a date, VAT becomes payable. Secondly, VAT is due and payable on the date on which ownership in goods and or services passes or performance obligation, performance of the services is completed as the case may be. Okay, on the date on which ownership of the goods passes from the buyer, from the seller to the buyer, or the performance obligation is satisfied, is fulfilled by the seller, on such a date, VAT becomes payable. Number 3, in any other case, the earliest of the following of the dates on which A, the goods are removed from the premises or from other premises of the taxable person, where the goods are under the control of the taxable person. Okay. B, the alias of this, what I'm explaining now. B, the alias, the goods are made available to the person whom they supplied, or C, the services are supplied or rendered, or number D, a tax invoice is issued to the buyer by the seller. Okay, or on a date on when payment is received for or part of the supply. Okay, the earliest of those, you must pay your taxes. Okay. Remember, we're continuing with time of supply, and you're on number 4. Number 4, we're saying where supplies are made on a continuous basis. Where supplies are made on a continuous basis. Or by metered supply, or by metered supply. When a meter reading is taken, or at the time of the determination of the supply. You know, in the past, before the prepaid system came into effect, ESCOM and the Water Board, they used to take meter readings. I think they still do in some areas. So that applies to number 4, where the supplies are made on a continuous basis or metered supply is when a meter reading is taken, or at the time of the determination of the supply, at a time when Water Board charges you according to the meter readings. That's when tax become payable. Okay, very important to note. Number 5, where goods are supplied under hire purchase. Where goods are supplied under hire purchase. Or finance lease agreements, on the date goods are made available. So the time of supply is when the supply or the goods are made available for use. Okay. Number 6, which is the last one, where goods are supplied under a rental agreement. Where goods are supplied under a rental agreement. Or where the goods are supplied under an agreement or a written law which provides for a periodic payment, which provides a periodic payment. The time of supply shall be the time of supply shall be treated as successively supplied. Shall be treated as successively supplied. Okay. For successive parts of the period. For successive parts of the period. Very, very important to take note of that. I hope you were taking notes. Okay. So let's continue. In terms of imported goods, in terms of the imported goods, in terms of imported goods, How does VAT or how is VAT calculated? Okay. So imported goods, what normally happens is that they take the value determined for custom purposes under Custom Act. There's a value determined for customs purposes under Customs Act. And then they charge import duties. And then, so basically what we're saying, for you to be charged VAT, there is a value of the goods that you've imported from outside of the country. And there is also an element of import duties that you've paid on those goods. Import duties, if any, paid or payable, paid or payable to Malawi Revenue Authority. Then what happens that if there is any other duty or levies or levy payable at the time of importation, so taxable supply of VAT is taxed on the sum of VAT is taxed on the sum of the value determined for customs purposes. Then you have your amount there. Then you take import duties, if any, payable to MIA, you put your amount there. And any other duty or levy, payable to MRA on importation, you take there. So then you have the sum, which is the total. You have your total here, the total. Now your total here. Then that's your subtotal. Then you charge VAT charge. VAT charge at 16.5% on the value of the total. You put it here. Okay. That's what it is. Very, very important to note. Okay. And there are times when there is what is called deductible input VAT for partially exempt person. We are saying deductible input VAT for a partially exempt person. Who is a partially exempt person? I explained earlier to say a partially exempt person is a person or company that is supplying exempt goods and taxable goods. Okay. So what do you need to do? There is a standard method. Okay, I should start by saying if a registered person cannot be treated as a fully taxable person, he cannot take credit for all inputs, VAT. Okay, so what should a person do? This partial exempt person do? The person is required to work out how much can be claimed using the standard method. The big question is, how is the standard method determined? Follow me. Don't lose me. Follow me. The question is, how is the standard method determined or calculated? Quite important. How is the standard method is determined? So number one, the first thing to know, you need to identify all supplies and inputs received and work out the extent to which they are directly related to the taxable supplies. So what happens is, this amount will be used to determine allowable input VAT. First of all, you gotta identify all supplies and inputs received and work out the extent to which they are directly related to the taxable supplies. Number two, identify all supplies which are directly attributable to the exempt supplies. So this amount will be used to determine disallowable or exempt input VAT. Identify all supplies which are directly attributable to exempt supply. So there are supplies attributable to taxable supplies. There are supplies attributable to exempt supplies. Those are the second one that you identify. Number three, you gotta identify all supplies which cannot be directly attributed to either taxable or exempt supplies. So this amount is subject to adjustment as per the below. Okay, the amount that you cannot specify whether it's taxable or non-taxable or exempt is open to adjustment. So what you're saying is that the following formula, there's a formula that needs to be used. The following formula should be used, okay, where we're saying A times B, the answer that you find on A times B, you need to multiply, or you need to divide, sorry, you need to divide by C. A times B divided by C, where A is the amount, or A is the total amount of input VAT identified at step number 3 above. Okay, then B is the amount of taxable supplies made by the taxable person during the period. And C is the total amount of the supplies made by the taxable person during the period. Okay, that's all. So point to note is that a point that you should not forget is that the registered person cannot claim in input VAT where when the registered person apply the above formula and find out that the amount is found out that the fraction of the taxable supplies to the total supplies is less than 5%. Number two, another point to note is that the registered person can claim all the input tax when, after applying the above formula, the fraction of the taxable supplies to the total supplies is more than 95%. Okay, so input VAT paid on the following should be disregarded. Very, very important point. Input VAT paid on the following items or goods should be disregarded. Should be disregarded. Motor vehicle and motor vehicle parts, unless the registered person is in business of hiring, selling, and dealing in motor vehicles and motor vehicle spare parts. Okay. 1, motor vehicle spare parts, unless the registered person is in the business of selling or is in business of hiring, selling, and dealing with motor vehicles and motor vehicle spare parts. This is a law. Number 2, motor vehicle and motor vehicle spare parts, unless they are used wholly, exclusively, and necessarily for the purpose of the business. Motor vehicles and motor vehicles spare parts, unless they are used exclusively for business purposes. Okay. Number 3, entertainment. Entertainment, including restaurant, meals, hotel expenses, unless the registered person is in the business of providing entertainment. Entertainment, including restaurant, meals, and hotel expenses, unless the registered person is in the business of providing entertainment, is in the business of providing entertainment. Okay. All right, and so on and so forth. There's other two where we're saying that terms of the agreement made with the Malawi government includes exemption from taxes if the government of Malawi gives you a relief of not submitting taxes for the purposes known and approved by the Commissioner General and the Minister of Finance sometimes. Okay, or specified goods for the use of the government donation. You are not supposed to be charged VAT. Okay. Very, very important. I urge you to read the VAT Act. Now and again, the officers from the Malawi Revenue Authority visit your premises to verify the returns on hand and to confirm that the correct VAT has been paid or claimed from the Malawi Revenue Authority. So people from the MRI, these officers, they come to audit or to check from your premises if you are doing things correctly. And they come also to carry out checks and observation to detect error or any possibilities of fraud in your business. And they also come to examine the accounting system, production and sales method of a registered person. And they also come to ensure that registered persons understand liability and the basis of value and are applying them correctly within the limit of the laws of Malawi. So the types of the visits can be routine visits and the special purpose visits. Routine visit is where the officers come randomly to you. And the special purpose visits is when the visits are carried out for a particular reason, where fraud is suspected, or to check correctness of final return. Okay, if there's a case between you, the taxpayer, and the Malawi Revenue Authority. Okay, so how are the refunds of VAT work? In any month, a registered person's input VAT exceeds his output VAT. The excess is carried forward to the next month. So if the excess continues for 3 months, the Commissioner General may refund the excess on application by the registered person on a form called ST11, where such refunds may be made after verification by the officer from the Malawi Revenue Authority. So you need to carry forward 3 months of your claims, and you need to write a letter to Malawi Revenue Authority and fill in a form that is called ST11 in order for your refunds to be made. Now, there are also VAT penalties that you must know. VAT penalties. I normally say that it is quite important to, the only way to manage taxes is to pay at the right time. If you want to be clever, that's when you pay heavy penalties up and above the normal that you're supposed to pay to Malawi Revenue Authority. So it's better to submit and calculate correctly. So number one, if you have false invoicing, where any person who issues an invoice which falsely purports to be a VAT invoice is required to pay any amount of VAT shown on the invoice to Commissioner General within 7 days of issuing that invoice. Okay, so any person who issues a false VAT invoice is required to pay the invoice amount, the VAT amount on the invoice to MRA. Okay, number two, failure to do that, you are going to be prosecuted. If you fail, that's failure. Failure to issue a VAT invoice, there's also a penalty. So, you know, section 46 states that a person who fails to issue VAT tax invoice as required under section 21 of the goods supplied or services rendered commits an offense and is liable to conviction to a fine of 10 times the value of the VAT. So you have to pay 10 times the value of the VAT. Why not pay it correctly? Or why not, or why just issue a VAT a tax invoice? Failure to submit VAT returns. Number three, failure to submit VAT returns. There's also a charge where it says that section 34 subsection 8 of VAT Act 2005 imposes a heavy penalty for failure to submit VAT returns, the penalty of MK 20,000. I'm sure these rates are revised. You need to cross-check with the Malawi Revenue Authority website. 20,000 and a further penalty of 1,000. MK 1,000 for each day that the return is not submitted. Okay, I need to check the revised act, what it says about that, and I'll confirm on our next episode. Okay, so if you fail to pay VAT, there is also a fine. So interest accrue will be charged at the ruling bank rate plus quarter of the rate for the period or the number of days or months VAT remains unpaid. So if person fails to pay VAT on the correct date, on the due date, or if payment of the VAT is done by way of a check, and that is the check letter is referred to RD, a return check, there's a penalty of 30% on that check amount. Okay. Number four, return checks. Returned or checks that bounce. So penalty of 30% on the value of the check is charged. Why not pay correctly to avoid such? Okay, very, very important to note. So the other offenses, section 45, subsection 1, states that persons who fail to apply for registration as required by section 11 or notify the Commissioner General of a change in business as required under section 13, or to apply for cancellation of registration as required by section 14, commits an offense. Okay, so subsection 2 states that they are failure, or the failure under subsection 1 is deliberate or reckless. The person shall be liable on conviction and a fine of 100,000 kwacha and imprisonment for 5 years. And for any offense, for any other reasons, the person shall be liable to a fine of 20,000 kwacha and to imprisonment for 12 months. And finally, section 47 states that the person who is in any matter relating to the VAT makes statement to an officer of the authority, which is false or misleading in any material particular, or omits from statements made to the officer or the authority any other or thing without which the statement is misleading in any material particular, commits an offense. So the penalty is 100,000 and imprisonment for 5 years. In any case, 20,000 and 12 months imprisonment. Okay, so why not do the right thing? So there are advantages of a VAT credit method that I must elaborate. We're saying advantages of VAT credit system. Okay, number one is that advance payment of VAT enables government to receive revenue earlier than otherwise. It enables the government of Malawi to have a float for government business. Government spending, okay, or government business. Number two is that VAT invoice or import bill or entry evidence requires for deductible input VAT tax created an audit trail within the system where it is self-policing. The system is self-policing, where you check whether you are doing things right or you are doing things wrong. Okay, number three, fraction payment is less erroneous or less burdensome. It is less burdensome to handle. It reduces the pressure that the business may have in the long run. So associated business will be registered and transfer pricing is countervailed. Okay, if you have several businesses and you're trying to push in transfer pricing, that transfer pricing element is countervailed or is put to open, to put to light. So tax point of manufacturing returns is at a retail stage. If you are a wholesaler and you manufacture, at the point of tax is a retail point. You know, VAT is transferred. It's done in a transferred system where one person transfers the next person, the other person transfers to the other person until that VAT is paid. It just rotates. within the system. Okay. So when you're doing 40 invoicing, will be captured. It'll be by MRI, and the MRI doesn't play. The hammer. They make sure that they put you in the right place. Otherwise, I wish you all the best as you're going to follow my next presentation. My name is Paul Jones Malawi, and I'm a certified chartered accountant, a member of the Association of Chartered Certified Accountants, ACCA, and I'm always available should you require my services. These services span from consultation, span from part-time lectures, and preparation of financial statements for tax purposes. The go-to person, and I will help you to understand that. So in conclusion, my cell number is +265 993 111 657 657. Okay, you can send a message on WhatsApp, because I'm roaming this one. So that's my WhatsApp number. I'll be available. Or if you want to call directly, you can call me on for calls. You can call me on +27 63 196 3769, and we are going to have a nice conversation. I wish you all the best, and as you follow my next slides, my next presentation. Thank you very much. Bye-bye.